We will see a whole new wave of millionaires over the next 10 years. And the difference between the people that become millionaires versus those who get left behind is the people that become millionaires will understand the coming economic shifts. I don't have a crystal ball that can predict what's coming, but I do have the next best thing, a magic ball. Where is the market moving, magic? All jokes aside, I do own a financial media company that specializes in investor research, where we have a team of market analysts that do this full time, that are researching what shifts are happening in the economy. So if you're an investor and you're wondering where's the money moving, you were in the right place, because if you stick with me through the end of the video, I'm going to go over 5 shifts that are going to shape our economy over the next 10 years. More specifically, I want to talk about the innovations that we're seeing in technology and what might be coming. I want to talk about the impacts of the aging population that we're seeing right now and how this can create an investment opportunity for you. I want to talk about the shifts that we're seeing in global trade. We've already seen a lot in 2025. How is this going to change the economy and investment opportunities? Number 4, the shifts and advancements in healthcare. How do those create investment opportunities? And of course, number 5, the shrinking middle class. How does this create an investment opportunity and what's coming? So let's jump right in, going from top to bottom, starting with tech, but let's start by making sure we're all on the same page. In this video, I'm talking about investing your money based off of where the opportunities might be. And there are 2 general ways that you can invest your money. You can invest your money actively, or you can invest your money passively. When I say invest your money passively, I mean investing in something broad. Say the S&P 500. The S&P 500 is a group of the 500 largest companies in the stock market. And now, if that's what you're doing, you can follow a strategy like A, B, B, which stands for always be buying. You set up a system to buy the economy, the S&P 500, every week, or every 2 weeks, or every month, and you set it and forget it. You don't need to worry about any of these shifts. You don't need to worry about what's happening with tariffs or any of the day-to-day swings in the market. You just always be buying, and you can ignore all the financial noise. The alternative is active investing. This is not trading. This is investing into something where you believe the money is moving. You believe that there's a shift happening in the economy. You believe that there's a shift happening in the markets, that this investment is going to be worth a whole lot more in the future. And that's what can create an investment opportunity for you. This is more risky. It comes with more potential return, but more risk because you can be wrong. You can see a recession. You can see a lot of things happen that just kill your investments. Versus here, lower risk, lower potential return. This type of active investment takes more work and time and effort and research. And this is where my team at Briefs Media has a department called Briefs Pro, where we have market analysts that specialize in this type of research, and we publish it in a report for some of our investors called Market Briefs Pro. Now, when you're making investment decisions, you also want to understand that not every investment opportunity is a good investment opportunity for you. I like to say it has to make legal sense, financial sense, and moral sense. This means it wants to be legally sound, something that is actually a legal investment. Number 2, it should make financial sense. You have the opportunity to make money. And then number 3, it has to make moral sense. I'm not going to be the judge of your moral compass. I'm going to talk about where money is shifting. And then you have to decide if it's a good investment opportunity for you or not. But again, I'm not a financial advisor. I can't tell you what to do. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some points, to make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Now let's talk about technology shifts that we're seeing right now. Let's fast forward through AI, because that's already hit the mainstream. Now, I'm not saying that there's no investment opportunity in AI companies or AI stocks, but let's talk about the next 10 years, what might be coming. More specifically for this video, I want to hone in on AGI, artificial general intelligence, quantum computers, and number 3, artificial intelligence energy needs. Let me show you what I mean. The goal for most savvy AI companies isn't to create a smart AI. It's actually to create a smart AGI, which has not happened yet. Take a read. Creating AGI is a primary goal of AI research and companies such as OpenAI, Google, and Meta. The difference between AI and AGI is that AI gives you answers. I can go onto ChatGPT and ask, how do I make a YouTube video? Well, I can go to AGI and it can do something for me. I can say I want to make a YouTube video, and then not only will it tell me how to do it, but it can actually edit my video for me. And then it can upload the video onto YouTube. And then it can give you more YouTube ideas based off of what's doing well on YouTube, and maybe even help create those videos with AI avatars. So artificial intelligence like ChatGPT is there to give you answers for questions that you have. But AGI is there to actually do the work, and some experts say that it's 5 to 10 years away, but now we have some reports saying that We might be seeing AGI as soon as 2026. And this can create an investment opportunity because we know there's already a lot of hype around AI, but the first company to crack AGI will be a real revolutionary and could see its stock value really skyrocket. And this can, of course, create a potential investment opportunity because we know that AI created a huge boom in the markets. And AGI is expected to be even bigger. And we don't know who's going to win the AGI race just yet. Then there's quantum computing. Quantum computing produces a chip that a computer can use. Right now we use regular computer chips, and these computer chips that we have right now can only process a certain amount of data at one time. Well, a quantum computing chip can process data and problems at a rate millions of times faster, if not more, than a regular computing chip. So it's essentially infinitely times more powerful, more faster, and more smarter than a regular computing chip. Which means once quantum becomes a real thing, it could really exponentially power AI and AGI even more. But again, quantum computing chips are not exactly usable just yet for regular people. But if and when quantum computing chips become a real thing, it will shake up our technology and our economy and the stock market forever. And there are some companies that are really fighting to lead here. IBM has been heavily invested into quantum computing, along with Microsoft, who's been deep in quantum, and even Amazon has been deep in the quantum game. Who's going to win the quantum race? I don't know, but it might be something to pay attention to as an investor. And then we have number 3, which is AI energy. All of this new information will mean that tech companies need more energy to power all of this innovation, and they're going to need to store all this data. The more powerful the processors, the more data they're going to have. This again can create a potential investment opportunity because there are companies that specialize in providing energy to those companies. But that's not all. There are also companies that specialize in storing and managing the data for those same tech companies. So there's a lot of shifts happening in the tech sector right now. This could create a potential investment opportunity if that's something you're interested in, which brings me to number 2. How does the aging population create a shift in the economy and markets? By the way, this is where my team at Briefs Media publishes a free newsletter. This is different than Market Briefs Pro. Our free newsletter is called Market Briefs, where every day my team is breaking down what's happening in things like the economy and stocks and housing and crypto and the global economy into a fun and witty and easy to read newsletter. It's completely free. We have hundreds of thousands of investors that are reading Market Briefs every morning, and you can read it in less than 5 minutes every day. So if you want to read Market Briefs for free, I have the link for you to join down in the description below. Baby boomers in the United States and across the world are getting older at a rate that we have never seen in the world before, which means we have a lot of people getting older. And every chart will show you that this trend doesn't look like it's slowing down anytime soon. As people generally get older, they need more support and they need more healthcare. So now if you start to think like an investor, you can start to see how this could create a potential investment opportunity. For example, this is a shift that BlackRock has identified, which is why they've been spending a ton of money expanding their investments into senior living centers. And in case you're wondering, yes, there are companies, REITs, that specialize in senior living centers that anybody can invest in on the stock market. And then to supplement the support, generally, as people get older, they need more health care, whether it be medication, whether it be more support, whether it be more nursing, which is another thing that more elder people generally need. And in case you didn't know this, Wall Street has already created funds that specialize in investing in companies that profit off of people getting older. Take a look. iShares has an ETF titled the iShares Aging Population ETF, and then if you read below, you might find the description interesting. The fund seeks to track the performance of an index composed of developed and emerging market companies which are generating significant revenues from the growing needs of the world's aging population, defined as people aged 60 years and above. Again, my goal isn't to tell you what to invest in, but I want you to start thinking like an investor because that's already what Wall Street's doing. And so there are funds out there that are investing in companies around the world that specialize in care for older people, which can create an investment opportunity for those of you that find this an interesting investment for yourself. Now remember, not every investment is a good investment for you, and then you're going to have to do your own research to see, is this a good company? Is this a good fund that you're willing to take the risk on? Because, well, not everything is going to go up, even if there's a shift happening in that direction. So now we've talked about how the aging population could create an investment opportunity. Let's talk about number 3. How is global trade shifting? And how does that create an investment opportunity? Let me start by explaining what's going on. For decades now, we've been living in a globalized economy where we would buy goods for cheap in China and then sell them at Walmart at a discount. But now things are starting to shift. On one hand, we're seeing more and more tariffs rising across the world, and on the other hand, we're seeing global tensions rise along with tariffs. If this shift continues, then chances are we will see more manufacturing move back into the United States, either because they want to A, save some money by not paying tariffs or the higher taxes if you produce your products overseas, or because B, they don't want to deal with the headache of all the concerns that are happening globally. So if more manufacturing comes back into the United States, well, that can create a potential investment opportunity. Number one, more manufacturing coming back into the United States means that construction companies that are building those facilities could benefit. Number two, it could mean that you could invest in the companies that are actually owning those manufacturing facilities and plants. Or number three, the transportation companies and the logistic companies that move products from one facility to the other could also benefit as well if companies move their manufacturing back into the United States. Second, as global tensions begin to rise, more countries want to be more independent, which means they might want to have access to their own commodities. And we know that certain countries, like the BRICS countries, right now own a big chunk of the world's rare earth metals. So if hypothetically countries cut off ties with one another, if a country cuts off ties with the United States, well then more countries would need access to more metals, more commodities, which could create, again, a run-up in the prices of those commodities, which could benefit investors who own those commodities. And then of course is number three, defense and cybersecurity companies. If you continue to see more global tensions, well, defense companies generally benefit when you see tensions because defense companies are producing things like bullets and ammunition and tanks. So they like it when there is a war. They like it when there is disputes because that means that generally governments are beefing up their militaries, which is good for those defense companies. Likewise, even if it's not a physical war, you could start to see more companies beef up their cybersecurity because if there are concerns of China hacking companies in the United States, companies in the United States will want to beef up their cybersecurity to protect themselves against that. We are just chugging along. Now let's talk about number four. Innovations in healthcare, which is something that I feel like everybody has some sort of exposure to. Forbes recently published a very interesting article titled The Biggest Healthcare Trends in the Next Decade. And three of the shifts that Forbes highlighted include 3D medical printing, gene editing, and telehealth, and how each of these could create a potential investment opportunity. Starting with 3D medical printing, you probably know what 3D printing is, where you can use a 3D printer to print a brand new fork. Well, now with 3D medical printing, instead of printing a fork, you could print a brand new heart or a lung or a kidney that could be used to transplant into somebody that has a failing heart or lung or kidney. We're not exactly there yet, but there are companies racing to be able to produce this as a real viable product that hospitals around the country or world could use. And that could create a potential investment opportunity if you can find the right company or fund. Gene editing is also very wild. This is where medical professionals can go into your DNA and remove a disease. So if you have cancer, you have some other disease, they can go into DNA and remove it from your DNA. That way you can ideally remove the disease from your body. Again, we're not exactly there, but there are companies that you can invest in that are specializing in that type of research. Will it happen? Who knows? When will it happen? I don't know. But if that was to happen, it could create a very successful investment for the people that were early investors. Is it guaranteed? Absolutely not. But you can understand, high risk, high potential reward. And this brings it to number three, telehealth, which is where Forbes says this is where a lot of people are moving in medicine, especially for basic visits. And not surprisingly, there are a number of companies and stocks that specialize in this shift that we're seeing happen. And this brings us to last but not least, the shrinking middle class. How does that create a potential investment opportunity? Now, I hope you understand that when there's a shift, there's also risk, because there's risk that number one, the shift doesn't actually pan out. Then there's a risk that number two, the company that you invested in doesn't actually see the success that other companies might see. So when you are an active investor, you gotta understand there's more risk for more potential return. And there's a lot of risk that could happen. There's a risk that the shift doesn't happen. There's a risk that the economy goes into recession. There's a risk that your company runs themselves into the ground. But if you can find a good opportunity, you could also see a potential big payday. We know that inflation has been a problem, and there's a chance that inflation will continue to be a problem. And we also know that inflation disproportionately hurts the average person, while it benefits the financially educated and the wealthy. This has been causing the middle class to shrink, which is really not a new trend, but it really accelerated after the pandemic. And so if we continue to see this, where the middle class is shrinking and we start to see a smaller percentage of people that are wealthy and then everybody else is kind of not, this also creates an investment opportunity. What do I mean? Well, for one, I want you to become financially educated so you can become an investor so you can win in this economic system, period. My whole mission is to help people build their financial education so you can learn how to use your money smartly and become an investor. That way you can actually build wealth and use this system to your advantage, because unfortunately, we are never taught this stuff. Trust me, I know, I didn't grow up learning this stuff either, but that's besides the purpose of this video. For this particular shift, if we start to see more and more people continue to struggle with money because of inflation, because of the economy, just the way it is, well, more people could become then budget shoppers, which could create an investment opportunity if those budget companies begin to benefit and there are stocks and funds that specialize in investing in those specific budget-related retail companies. The other part that goes hand in hand with this is housing affordability. Now, it is no surprise that housing affordability has really gone down like a rock, and more people are saying, you know what, screw it, I'm just gonna continue renting for the rest of my life. And if that trend continues, that can also create an investment opportunity. Obviously, you can go out and become a landlord and invest in properties if that's something you're interested in. Or there are funds out there, there are real estate investment trusts out there that specialize in investing in those types of single family homes, and you can invest in those if you believe that that's going to continue to be a trend. Again, my goal for you isn't to tell you what to do, but to have you start thinking like an investor, because the reality is the way you become wealthy in this economic system is by investing your money. And there are many ways you can invest. You can become a passive investor, just invest in the economy, not have to worry about the shifts, and you just do something like ABB, always be buying. Or if you want to be a little bit more involved, you're a little bit more of a money nerd, and you want to keep up with the companies, you understand that it's more risk for more potential return, you could be more of an active investor where you look for more shifts. And we talked about 5 shifts today. We just finished up talking about how a shrinking middle class creates potential investment opportunities. And this is what my team at Briefs Pro covers. I told you about Market Briefs, which is our free financial newsletter. We also have a paid newsletter called Market Briefs Pro that you can get when you become a Briefs Pro Gold member or higher. This is something, if you are interested, you can learn more through our Briefs Media company. But again, my goal for you is for you to start thinking like an investor so you can find investment opportunities. That way you can grow your wealth and use the system instead of being the person that just makes everybody else richer. Quantum computing is the next generation of technology. You can think of quantum computing kind of like a supercomputer on steroids to the 1000th power. All that means is that quantum computers can solve a lot of math problems very fast. Bitcoin is built on the blockchain. This is a chain of a lot of math problems.